If you've been thinking whether you should jump into the market or sit on the fence for the rest of the year, then this is absolutely the video for you. Now, I've spent a whole bunch of time over the last month preparing for this video, and there are many positives as well as a whole bunch of negatives in the market for 2023. Now, to be fully honest, after looking at the data, I really don't like the look of Hobart, Sydney, Melbourne or Canberra this year. I think all of those markets have gone through an insane run since the last GFC, and I don't personally see value there anymore. That said, a bunch of those markets have seen a pretty significant fall between the 8 and 15% in the last 12 months. And so there will be short-term gains as prices move back to where they were previously. The markets that I see more value in are the Brisbanes, the Perths, and the Adelaides. Now, these markets in the last 12 months have suffered like the rest of Australia as sentiment and the fear has crept back into the market. The reason I like them is twofold. One, generally in the second half of a real estate cycle, you'd expect those secondary cities to do better. And secondly, when I look at the 10-year or the longer-term average around each of those markets, they've received a much smaller average annual growth markets than the Sydneys, the Melbournes, the Canberras and the Hobarts, meaning at least from a statistical perspective that there's significant more upside in those undervalued parts of Australia right now. Now, before I get into the positives and negatives around 2023, I wanted to take a step back and look at the longer term perspective for the Australian market. I think it can be really dangerous and really easy during these periods of time where interest rates are going up, there's more fear in the market and the media is extremely negative and getting sucked into the idea that what's occurring right now is going to be your experience and the Australian property market longer term. Now, if you look at Australian real estate between 1972 and 2022, it averaged almost 8.2% per annum. Every one of the big capital cities in Australia, including Sydney, Melbourne, Brisbane and Perth during that period, did extremely well, averaging almost 9% per annum plus. Now, it absolutely sucks, obviously, when house prices are going down, interest rates are going up, and people are freaking out. And there's been many times in the last 50 years where this has occurred. But when we move away from what's going on right now and start to see the bigger, longer-term picture, the averages have worked out extremely well. In fact, property in Australia and Australian real estate has been one of the top performing assets in the entire world in the last 50 years. And unfortunately, it's always going to be a bumpy ride. It's never going to be this beautiful linear thing where you pick up a place for 400K and magically 10 years later, it's worth 800 grand. There'll be years when you lose 10%. There'll be years when you make 15%, and there'll be everything in between that. But the market really rewards investors with a long-term mindset and absolutely smashes those with a short-term one. Now, let's get real for a moment. There's a shitload of negatives going on right now. There's the idea of the mortgage rate cliff. And at the time of this video, I think in June 2023, there were more than 200,000 plus loans coming from a 2 to 3% interest rate up to this 6% rate that I'm paying at the moment. That's scaring people, but when you actually break down those loans and you look at the number of properties in arrears at the moment, most of those people are comfortably continuing to pay their mortgages, and I'll get to why in a moment. On top of that, interest rates are at 6%, and after having interest rates at 2 to 3% for a period of time, that fucking sucks. APRA is also continuing to be extremely brutal and making it very difficult for first-timers, second-timers, and investors to borrow money at the moment with their 3% cap above the current interest rate for all borrowing in Australia. Now, as brutal as that is, I actually love it because that's the main reason why the Australian banks and the Australian government protect our system versus what we've seen overseas in America in the past. Now, I've also got this dirty word in the market at the moment, which is inflation. And obviously last year, sitting at about 5 to 6%, this year to be sitting at about 6 to 7% is scary for many people, mainly because most of us haven't experienced it since the last GFC. Now, when I went back and did 100 years of research around so many crazy things from property prices in America, Australia, and Europe, as well as stock prices in those markets, gold, silver, a whole bunch of other commodities and precious metals, I found that there's only really two things that provide a buffer against inflation. One is property and the second is commodities. Now, Australia not just has one of the best real estate markets in the world, but it's got an incredibly stable government that is extremely good at redistributing the tax gains from the commodities in Australia to paying off the debt as well as investing in the Australian economy. Obviously, China looks a little bit shaky at the moment and the UK looks absolutely stuffed right now. And that's scaring a lot of people in the mainstream media too. And then there's just the general fear. I think since the start of COVID, the government and the media has been really good at working together to create an agenda. First, it was obviously around the vaccinations and getting us all on board with that. But now they've partnered in curbing inflation, and the media is really doing a good job partnering with the government and the banks to scare the absolute shit out of us and create mass uncertainty so that we stop spending and so that the asset prices and the inflation come back to reality. You know, what's crazy is the sentiment at the moment is almost basically exactly in line with the last GFC, but the difference during that period was stock market was down 60% and American real estate was down around 35%. So people are feeling just as bad right now as it was then. But as you'll see in a moment, the market is completely different and there are so many positives around right now. Now, if we talk about positives, one of the biggest pieces of misinformation in Australia is the average loan to value ratio. Now, if we look at the market objectively versus how it's being shoved down our throats at the moment, 1/3 of Australians own their homes completely outright at least. Another third of Australians rent, and there'll always be that third of Australians renting for life, which means that 30% of Australians carry the entire debt on the Australian property industry. Now, for many of those people, like yourself and myself, we bought those properties a little while ago, or maybe even recently, but we use cash deposits and we've been slowly chipping away at the debt, with the average loan to value ratio on Australia's debt to be below 50% unless people had bought in the last 3 years. I heard something even more crazy than this recently, which is the average debt to income ratio in Australia's households from CBA is literally sitting at 4% right now, which is in line with historical averages over the last 100 years. Another positive is the 400,000 people coming into Australia this year, combined with another 300,000 next year. All of those people have to pay their way in. Obviously, they want accommodation and places to live and then want to come and contribute to the economy, not just in terms of jobs, but in terms of essential services and then giving money back to the government from a tax perspective. All of those are extremely positive for Australia and one of the main benefits that Australian property has buffered so well in the last 50 years. According to the big banks, Australians are still sitting on a massive amount of cash, and the unemployment rate, even though they're trying to bump it up at the moment, is still coming down to a lower and lower rate. I think sitting at almost like a lifetime low at 3.4% in the last data that was released this month. Now, on top of this, as an investor, obviously there's a massive government spending that's still due to occur with the COVID bailout infrastructure fund. And in many markets in Australia, there's extremely low housing stock coupled with extremely low, almost record low vacancy rates. On top of that, there's a 5-year low in terms of the amount of property for sale at the moment. And when we look at the long-term averages of the amount of available stock on market, it is sitting way, way down right now. Now, all of those positives that I just mentioned for investors are obviously around the supply side. When there's limited supply and medium demand to high demand, we obviously in the future will see the result of that, and that result will be strong property price growth in the undervalued pockets of the Australian market, like the Brisbanes, like the Perths, like the Adelaides. Now, the last positive that they're not talking about heaps in the media is the fact that the most likely move at some point in the next year or two will be interest rates coming down. In fact, CBA and the Reserve Bank are saying that they could come down by as much as 1.25% from current rates by the end of 24. Now, when I geek out and look at the long-term history around that, for every 1% drop in rates that we've seen in the past, if that rate drop is held, we generally see a 15% spike in undervalued property markets around Australia. Now, while there's a massive amount of fear and uncertainty in the market at the moment, it's weird. Like, I actually feel better about the Australian market moving forward than any point since the start of COVID. I think there's a huge arrow or string being pulled back at the moment, and when it releases and when people start to feel better again and when sentiment comes back down to normal, we're going to be in a position where incomes have gone up, rents have gone up for investors, and people are sitting on stacks of cash. And at some point, people are going to get the shits with waiting and want to set up their financial futures and move towards the direction of their dream, and choices in their life. And if we think about this and take a step back, the real reason we're investing in property and assets is to create choices. The choice to do what we want to do, when we want to do it with the people that we care about, to spend more time with our kids and our families, to train more, to travel more, to serve the world more, to contribute to society in a better way, to volunteer more, to look after our health and look after our homes in a better way. And I believe all property really is a vehicle to go from where we are today to a financially free place in the future, so that we've got those choices to choose the way that we live for the rest of our lives. So for those of you who are thinking about taking advantage of the market while the sentiment is still low, I'd love to offer you a one-on-one strategy session. All you have to do is jump over to www.pumkedonproperty.com and book in that free session with either myself or my brother Simon, and we can talk about where you are today, where you'd like to be longer term. We can talk about the pros and the cons of the market, because it's not all rosy out there at the moment, and the market certainly isn't for everybody. But if you are in a strong position and want to make the most of it, where you are now and where you'd like to be longer term, and then we can talk about the pros and the cons of different markets around Australia at the moment and point you in the direction of the most undervalued markets. And then from there, you can go and absolutely smash it on your own, or potentially become one of the extremely small number of people that we work with each week. But either way, we wish you all the absolute best in 2023 and beyond, and all the safety. And hopefully 10 years from today, you're in a much better position because of the decisions you're making today.
Woo! That's a wrap.
That's a wrap.
Getting
Have a
cool,
spin.
bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that.
So nice, eh?
Oh.